The Nasdaq's tanking. Inventory is at a 6-year high and AI cash is flooding the Bay Area. So why are homes in Bay Area still flying off the market in 10 days? Let's break it down. Hey everyone, I'm Sanna, your Bay Area listed guide, and today I want to talk about something that has been coming up in almost every client conversation lately. What's going on in the market? With the stock market bouncing around, political uncertainty, and so much buzz around AI and real estate, is now even a good time to make a move? Let's just say 2025 hasn't been boring. The Nasdaq dropped over 10% earlier this year, and on April 8th, the VIX, Wall Street's fear gauge, spiked to 53.76. That's the highest we have seen since pandemic days. Investors are nervous, people are pausing, but when it comes to Bay Area real estate, the story is actually very different. Despite all the stock market volatility, home sales have climbed. October last year saw sales up 16.2% year over year, and this February was the biggest monthly sales gain across California. Over 283,000 annualized units sold. And if you're wondering what's fueling that, the answer is AI. Between 2022 and early 2023, over 50% of global AI venture capital flowed into the Bay Area. Just Q1 of 2023 alone brought in 75% of global AI startup funding. And all of that money, it is hitting the housing market now. In Santa Clara County, luxury home sales, that is $5 million and up, jumped 115% year over year. In Fremont, the median home prices are now around $1.4 million, thanks to AI engineers and execs from companies like NVIDIA and Meta. So no, real estate prices haven't crashed. In fact, the Bay Area median just reached $1.4 million. Sure, the appreciation is more modest, like Fremont's 0.8 year over year, but homes are still holding their value and they're still selling. But let's talk about buyer behavior, because that's what has really shifted this year. Some buyers, especially those with stock-heavy portfolios, are holding back. One of my clients at Apple backed off a $2 million purchase after their RSUs dropped 20% in a week. That fear is real, but at the same time, buyers with cash, crypto, or equity from previous sales are still moving fast, especially when mortgage rates dip closer to 6%. And they are pickier. Single-family homes are way more attractive than condos. Move-in ready is winning over fixer-uppers. And if a home is even slightly overpriced or in a weird location, like backing up a highway, buyers won't hesitate to walk away. Now, about inventory. This is big. Inventory has hit a 6-year high in Silicon Valley. We are talking a 70% increase year on year. In East Bay, listings are up 48%. Fremont alone has more homes on the market than I've ever seen in a long time. But Alameda County still has 2.7 months of supply. That's not enough to flip us into a buyer's market. Sellers still hold the power if they play it smart. Homes in East Bay, they are still selling in 10 days or less when properly presented and marketed right. Now let's talk about strategy. Because overpriced homes are starting to pile up. According to Redfin, nearly 1 in 4 listings in Alameda and Contra Costa counties had to reduce their prices in Q1. That's a huge shift. Overpricing is risky right now. But if you hit the market right, meaning your pricing is on point and your presentation is polished, you're still going to sell fast and often over asking. And school district demand is another layer of this market that hasn't cooled down at all. San Jose, Fremont, East Bay, Sunnyvale, Santa Clara, all the neighborhoods with great schools, they are still getting multiple offers. I have seen it happen over and over again. So if you're in one of those zones, that boundary line alone can mean a huge difference in buyer interest and price. And if you're a buyer, you need to come prepared. Santa Clara Homes open houses are still drawing 100 plus people on weekends. Pre-approval isn't just a good idea, it is essential. Now let's talk about investors for a second, because even in a competitive market like this, there is opportunity. I am seeing more and more out-of-state and even international investors circling back to the Bay Area. Folks from New York, Texas, and even overseas market are watching this AI-driven growth and betting on the long-term demand. Their targets? Mostly single-family homes in areas with strong rental potential, places like Sunnyvale, Fremont, North San Jose, which are in 30-minute drivable distance from the tech hubs. And for local investors, here's what I'll say. Even though homes are selling quickly and pricing is holding, there are still golden opportunities if you are paying attention. Homes that hit the market underpriced, listings that sit too long and become negotiable, they exist. But they move fast if you're not working with a proactive, aggressive agent who's plugged in. You're going to miss them. I have seen properties get listed on Thursday and snapped by Friday morning. These are kind of opportunities that can transform your portfolio, but only if you're ready to jump. Looking ahead, the National Association of Realtors expect Bay Area sales to rise another 10% this year. Price growth may be flat or modest, but job growth, AI hiring, and tight inventory are still strong fundamentals. Of course, we'll have headwinds, rising inflation, high rates, maybe even tech layoffs, but this is not a crash. It's a rebalanced market, calmer, but still very alive, very active. If you're thinking about buying or selling or just trying to understand where you stand in all of this, I'm here. Drop your question in the comments or shoot me a message. And if you found this video helpful, hit like, subscribe, and check out my other videos on various neighborhoods, 2025 mortgage trends, and where I think the next big investment zones are. Thanks for hanging out, and I'll see you in the next one.